So guys, in this video I'll be showing you the entry I took with an inversion fair value gap. The whole trading logic in this trade was based on an inversion fair value gap, and I'll also be explaining how I choose the right inversion fair value gap. So for this trade, the whole idea and narrative was built from the higher time frame 1 hour fair value gap. That's a bullish fair value gap after it took out the sell side liquidity. So I targeted that buy side and the consequent encroachment of that wick. As you can see, that's the middle of the wick there. So went down to the 1 minute time frame now, and we got this entry. The yellow line you're seeing there is the inversion fair value gap, that yellow line. So that was what backed up the trading plan, that if it was going to go higher, it should not go below that level there. That was how I executed on this trade. So I permitted every move to come down, but not below past that inversion fair value gap, which is that yellow rectangle you're seeing there. So at this point here, we had this volume imbalance here. It's quite small, so I changed the color to white. So we had that volume imbalance. I expected price to draw to that so I can add more position. So once price reached that volume imbalance added with the bullish fair value gap, I added more positions from there because I don't expect price to go lower below that inversion fair value gap. So in this case, this is a bullish inversion fair value gap because before now it was a bearish fair value gap acting as resistance to price, supporting lower prices. But at this point here, why it becomes an inversion is that it fails to act as its characteristics. Because that point of bearish fair value gap, now our bullish inversion fair value gap was a level of strong resistance to price, acting as resistance to support lower prices. But now you see how with speed price broke it and went higher. So we have the order block now. That means from that order block we should have price push higher. The order block should support price go higher, and we have an inversion fair value gap that is backing it up. So now, because we've had the order block be a strong level of institutional resistance, not allowing the price to go lower, so now that's a very strong level of support at that order block. So I can now shift my stop loss to be at the low of the volume imbalance. So an inversion fair value gap is actually a failed fair value gap. It also validates a shift in market structure. To trade an inversion fair value gap, you must build a strong narrative. So this is me closing out on my position. So since this trade was actually to illustrate how I use an inversion fair value gap, I didn't go with my full risk, so I had to risk a very little that I'm okay with. So you see how it hits and takes our buy side there. So I closed my position because the buy side liquidity was the original target. So if it does go higher, that's an extra for us. The trade actually reversed after taking the buy side liquidity, and we're okay with that because by now we've already exited our positions, and that's cool knowing how to exit. Okay, so this is one of the ways you can trade with an inversion fair value gap. There are other ways too, but I hope this was insightful to you. This way it reversed there. You've seen how it reversed from there. So I trust this was insightful to you. So if you like this kind of value I'm offering, like, subscribe, and turn your notification bell on for more videos. Okay, thank you, till next video.